right, welcome to another edition of Arden TV. I am Thomas Traplin. I am the marketing manager here at Arden Mortgages, and I have with me
Joseph Accardi. I'm the principal broker here at Arden Mortgages. And Tom, what are we here to talk about today?
Today we're going to talk about 7 tips to improve your credit score in only 3 months.
Excellent.
So, is that even possible? Let's start off there.
Yes, we've done that many times with certain clients. There's all sorts of ways to increase your credit score, and I don't want to say take advantage of, but take advantage of the way Equifax reports to the bureaus.
Okay, so what's the first tip? What are we got 7. Let's start knocking them down. What's the first one?
So the first one's going to sound a little silly, but it's pretty obvious. Make sure you get a copy of your credit report. You need a baseline to start with if you want to know if you're improving or not, and you want to know what items you can address on your credit report that you can improve upon.
Yeah, you got to know where you are before you can figure out where you're going. So what's number 2?
Number 2 is that exactly that. Correct any errors or anything on the credit report that are not accurate. The way that the credit report works is the creditors are the ones that send off the information to Equifax. So, for example, let's say you had a collection from Rogers or a phone company is a typical one, and you fixed it on your end years ago, but the company that reported the error never responded to say that it has been fixed. Mm-hmm. That's the first thing you want to address. So if there's anything on there, past collections that have already been dealt with, you want to call Equifax immediately and get them to remove that from your credit bureau.
See for yourself. So what's number 3 then? Number
3 is an interesting one that I'm not necessarily sure I agree with. It says apply for new cards here.
It's an option.
It's an option.
All these are options, and this one's a bit of a challenge for some people.
And I might be repeating myself in the future in this video here, but I'm going to say this anyway. It's important to understand how the credit moves on a credit report, and I've probably said this in previous videos as well. I'm going to sound like a broken record for a lot of people out here right now, but it's very important to understand that the more available credit you have, the faster your credit is going to increase. So obviously, if you apply for new credit cards and keep it under the 30% or 50% or whatever the case may be, ideally a $0 balance on the limit of the $0 balance on the limit of whatever the limit happens to be, right? Mm-hmm. That's going to be more available credit, and therefore your credit score is going to increase.
Okay, and also, just to add a little bit, this tip is meant for people who don't necessarily have a credit history yet. Maybe they're not like falling behind. This is for somebody who has a very thin file.
That's right.
You got to get started somewhere.
So the rule again is to have a minimum of 2 cards, $2,500 a piece, mm-hmm. and you want to get your 2 years history on both of them. The rule of 2s, as we call it.
Right. Which leads us into the 4th one.
Yep.
Right.
This one doesn't work anymore, so it's an interesting one. It's get someone to add you to an older card with a history. Credit cards don't report that way anymore. This might not even be a Canadian tip, just to be clear. Credit cards right now, even if they're joint, they don't reflect to the bureau as joint. I'm going to have to double check that, but I'm not 100% sure on that. But I'm pretty confident that even a joint credit card is only under one person's name. So Tom, if I had a credit card and I wanted to add you to my credit card, you'd be given a card and access to use the card, but everything still reports under my name. You don't actually gain any of the advantage of that. So this one doesn't necessarily count, but there are other items that you can become joint members on. Line of credit, so you can become joint. Mortgages, you can become joint.
Do you get the benefit of the history on that?
You do, yes.
Okay.
And vehicle loans, other loans in general, you would get the advantage of being a part of them. So.
All right. Cool. So tip number 5. Maybe this one should have been tip number 2. We should have put this one a little bit higher on the list, because this is the one you think of probably the right off the bat when you think of how do you improve your credit score.
It's funny too, because it doesn't have as much of an impact as a lot of people might think. So it's this: make your payments on time.
Yes.
Making your payments on time is absolutely important to improving your credit. It's actually not so much important to improving your credit as it is important to not hurting your credit. So making your payments doesn't increase your credit score that much. Not making your payments will drastically impact your credit in a negative way. So this is more of a maintenance, preventative item.
Yeah, it's kind of like avoiding the negative is kind of how you improve your score in a sense. Like you're not actively hurting it. All right, so tip number 6, if you're overextended.
This is a big one because, again, we mentioned how credit moves on the credit score, and there's many, many different things that come into effect on how your credit score moves up or down, from making your payments on time, which we discussed, available credit versus your total limit, right? So the bigger your limit and the more available credit you have, the faster your score is going to move in either direction. So I'll jump into this point. This point is, if you're overextended on any of your credit cards, then pay them down. So anytime a liability reporting to the credit card is over 50% of the limit, it actually has a negative impact on the credit score versus a positive impact. And again, that's exaggerated by the total limit of the card. So a $1,000 credit card with a $500 balance is going to have less of an impact on your score as a $100,000 credit card with a $50,000 limit. So if you have credit cards that are at their limit or past their limit, and past is even worse, so overextended, especially on your credit limit, pay those off, and we can help with paying those off if you have equity in your home. That's the fastest way to rebuild your credit. And I've seen credit scores jump 100 points in 6 months, just from taking $50,000-$60,000 worth of unsecured debt, dropping it down to zero with a private mortgage or rolling it into your existing first mortgage. And the private mortgages don't report to the bureau, so it looks like all of a sudden you've paid the way that the calculation works from Equifax is you had a whole bunch of debt last month, now you have less. When we report this month and there's that huge gap between the two, your credit score skyrockets.
So before we get into tip number 7, how would a 100-point increase in your credit score impact you down the road? What does that mean to you? What kind of benefits do you get out of that?
It all depends on, back to point 1, get your credit report so you know where you're starting.
Sure. So let's say you start at 500.
500, which is
Not
considered a low credit score.
Yeah.
So now from 500 to 600, a lot of doors open from the 500 to 600 mark. There are a few lenders that will not lend to anyone with less than a 600 Beacon score, right? 550 to 650 is an even bigger push because now you're at the point where you would be considered for prime lending.
So it could be a major difference to your life, to your finances, all kinds of
Absolutely.
Positive benefits. All right, so let's hit up the last tip.
Which is apply for a new card or a higher limit card.
So this is a risky tip. So if you're in a situation where your credit is not great, you're obviously listening to this because you want to improve your credit score. It's probably not at 800 or higher or whatever. So if you are thinking about opening up a new card or increasing your limit
at this point now.
This is a debatable point.
What's the difference between this one and point 3? Point 3 again was apply for a new card and stay under the 30% limit, or point 7, apply for a new card or a higher limit. I don't know. These are kind of the same, and my point stays the same on them.
A little bit.
So,
well, the higher limit in the sense that if you are maybe not overextended, let's say you're extended. You have 1 or 2 credit cards, but you're at 80 to 90% of your capacity.
Right.
If you apply for a higher limit, technically your utilization will go down, which could be a beneficial thing for your credit score. But the problem is, if you don't have the self-control,
the discipline
to not spend that money, you're just going to be right back in the same place as you were before, but now you're going to be paying interest on even more money.
That's right.
So this is a risky proposition. You have to be able to manage your finances well enough to not be tempted by the extra credit.
With $5,000 to $10,000 worth of available credit and a $0 balance on your credit score, that's the sweet spot that you want to be in. You don't need to go much higher than that, and you don't want to go less than the 5. So that's my answer to this. Do not apply for new cards just to increase or just to decrease the average or the middle point where you are with how much liability you have out versus with balance versus liability.
Unless you're below 5,000 or something. If you've only got a single $1,000 credit card, you probably need to up that ante a little bit.
Yeah, you want to make sure that you're at least the 5,000. So that's when this one comes in. 2,500, 2,500. 2 trades.
That's what we're aiming for. All right, so those are the 7 tips. What's the moral of the story here?
Credit is good.
Credit is good.
What's the moral of the story, Tom?
Is that you can do a lot to improve your credit score in a short period of time.
I wish I didn't say that. Leave it all in, though.
We will. Don't worry. All right. If you guys have any more questions about credit and how you can potentially change your finances, or if you want to ask us some questions about what we do or how we work and what we can do for you, we'd be happy to field those questions. Send them our way. Do the usual YouTube thing, like, comment, subscribe. Any closing thoughts?
Not today. I think we touched on a lot of very important topics. And to reiterate, my moral of the story here is the rule of two is very, very, on a serious note, the rule of two is very, very important. It's not just something that we're making up here. It's very crucial. The banks will not, especially after delinquency, consumer proposals, bankruptcies, the banks will not consider you without proving that you reestablished your credit. And and the way to prove that you've reestablished your credit is 2 trades, $2,500 a piece, 2 years history on them, 2 years positive history, so no missed payments for 2 years. That's the takeaway that I would take from this.
Fantastic. All right, we'll see you guys later.